Hello guys, welcome back to another Lumley trading video. In this one we are going to be going through our daily SPX analysis to kind of see where the S&P is likely to be heading today and what are kind of these key support and resistance levels. Now, as you hopefully noticed from the thumbnail as well, we have done a whole channel wide update, so if you want to join the new Discord, again always free obviously, it is in the description. So to get straight into it, we're currently sitting around 4,175 on the SPX. Now, the first thing we always do is go and check what are the options pricing in. Again, we're recording this a bit later than normal. Reason for this is obviously we had the big news coming out on JP Morgan and First Republic. So there will be another analysis on JPM later today on that. But off that news, kind of wanted the market to kind of settle and kind of trade a bit longer before we did this analysis. So that we can see now the options are pricing in a 19-point move from where we are currently, from kind of now. So again, the way I usually do this is from the opening price, not the current price. Because again, this value doesn't usually change too much coming off the open. Might change by a few points. But usually, when we're looking at this value, this is the value we're looking at, the move from the open. So again, 19 points is what I'm looking at, and then I'll usually just round it up to that kind of that next whole dollar level. So in this case, I'll be looking at the 4186 as a resistance. And again, got to do the exact same thing to the downside, or what are the key supports. Again, more likely again that we do kind of continue up, because by JPM coming in for First Republic, obviously that is a good thing. It's going to make the banking sector that bit more stable, because obviously JP Morgan always has that fortress balance sheet. That is Jamie Dimon's philosophy. So right now, these two levels, this is where we are expecting it to trade basically within. If we start trading outside of this area, this is when the stock is quite parabolic on the day. And then this is really where you can get those really big moves. You know, when you see the market up, 1% or 2% on the day, this is the level that you're usually going to be watching for. For the example, if we do start going to the upside, the main thing I'm watching for is a break above this level. And if we can come back to test this as a support and we start holding this level, then really those are the kind of breakout days. So that's how I look to play it. The first time we come into this, really, I will try and play a reversal. If I can get the premium cheap, I'll play the reversal. Though if we do break up, come back to test it as a support and it holds, that's when I'll get out of that trade, take that small loss, and then potentially look to play the trend. Because again, this is usually how you'll get those big moving days. So those are the first few levels I'm paying attention to. Then really the main things I'll be looking out after this is putting on the standard deviation channels, and then usually looking at about a 5-day, 5-minute chart. Because again, these deviation levels is just what is the probability that we start to reverse. So what I like to do is find these levels when we come into and kind of near to our option pricing levels. So we can see to the resistance side, our closest level is 4,195. So, about a 9-point move. That is quite wide. And so when it's this kind of wide, I'll just go on to a different, on kind of a longer, because obviously the longer the time frame, the stronger these levels are always going to be. So really it's all about then looking onto a longer one. Is there one that's closer on a longer term time frame? And in this case, there is. If we go to the 10-day chart, then at 4192, we do have our third deviation. So that is what I'd be looking at this zone now then as a resistance. If we start breaking out of here, again, this is then where I would be looking more for a breakout trade. If we kind of come above that 492, we start coming back to test that 4186 and we hold that and again push to the upside, then that's probably where you have a bit more of those parabolic days. If though we come into around that zone of 4186 to around 4192 and we start to pull back, then obviously looking much more for a reversal trade in general. And if we did end up going to the downside, again, we do have our option pricing low of around 4,147, and we'll just note the kind of a 10-point range to the downside, because again, that is a lot less likely that we hit this downside range. But we'll be looking at the 4137 as well. So this will kind of be the range I'll be paying attention to, and this is usually the main thing I'm focusing on. Is if we trade within this range, again, to me, there's not too much trading opportunity. If we start hitting one of these ranges, then looking for that reversal, and if we end up breaking through one of these ranges, then looking for a trend on the day. So that was the breakdown on SPX. I hope you enjoyed the video. If you did, why not drop a like and subscribe, and if you want to know about JP Morgan analysis, we're going to have that later in the day, just obviously to cover all this First Republic news coming out. So I hope you see you next one, and that's it. Peace.